I'm Andrew Mackin, Chief Investment Officer at Montgomery Global.
I'm Chris Damasi, Portfolio Manager here at Montgomery Global.
Okay, so Chris, this week we're going to be releasing our white paper that we've been working on, titled The Marvellous Mr. Market, and that's a shout out to the new hit TV show, The Marvellous Mrs. Maisel. And for anyone who's watched that show, it's a great show. Plenty of twists and turns, and that's exactly what Mr. Market has been giving us over the last few months. In the paper, one of the ideas we explore is this idea that actually, it may be the case that stocks are not as risky as everybody thinks right now. So we're just going to delve into one of the key thought experiments that we conduct in the paper. So Chris, why don't you step us through the chart that's showing on the screen at the moment?
Yeah, absolutely. And I think it's a great point. Things like the show might just not be as they seem. Global equities are up quite significantly over the last 4 years, say. And most of that's been driven by outperformance in the US stock market. And you can see on the chart, we've plotted the S&P 500, the US equity index, over the last 4 or 5 years. And that's represented, the blue line basically goes from bottom left to top right. A lot of the gains in the last 4 years in particular, however, have been driven by one factor, and that's really been Trump's tax cut, which saw the corporate tax rate in the US drop from 35% to 21%. And if you flip that on its head, it means that post-tax earnings rebased upwards by more than 20%. And that's been the key driver of a rebasing in the US equity market, and has accounted for almost all of the gains over the last 4 years.
And of course, investors can't expect to get that every year. Right?
This is a one-off rebasing. This is not the sort of returns that you get from being exposed to equities or taking on equity risk. This is a one-time gift from President Trump, probably the only one that people will get. And so where does that leave us if we think about what are you left with as an equity investor without this gift from Trump? And we've tried to back out the impact of that on the stock market performance over the last few years, and that's on the red. It's shown in the red line on the chart. And what you can see from that is that at the end of 2018, after markets had sold off, is that after adjusting for this one-time gain in post-tax earnings, that the market was essentially flat.
Wow.
And that's at a time when earnings are up, pre-tax earnings are up, right?
So you've got a period during which earnings have gone up and stock returns have gone sideways.
And you see that in the multiple. So the multiple of the market at the end of 2018, the PE multiple was 15 times. I mean, a lot of people were drawing parallels to the potential for, a bear market like 2001 and 2002, right around Christmas last year. I mean, the difference, of course, is that the multiple of the market was 15 times at the end of that bear market, whereas we're at 15 times back in December 18. I mean, what would have had to happen for us to have a sustained bear market?
From here?
Well, from December 18. What do you need to believe the multiple trades to?
It'll be down at 10 times, 9 times, 8 times.
Yeah, lower.
You're getting crazy low at that point.
So in our minds, at least, the market wasn't as expensive and returns hadn't been as great this one-off benefit from Trump. And even now, a couple of months into the year, we've had this wonderful rebound in equity prices in January and February. Stocks are back, about another 20% today. That still only puts the market about 11% ahead of where it was 4 years ago.
Right, and that's not 11% per year, that's just 11% in total.
No, that's just an 11% total return compared to where it was 4 years ago. So knowing that, we still think that on balance, equities aren't looking as expensive even now, after a rebound in equity prices in January and February, equities just aren't looking as expensive as what I think a lot of commentators would lead you to believe.
Yeah, interesting. Well, if you'd like to learn more, please check out our white paper, The Marvellous Mr. Market, available at the end of this week.